going to talk about percentage of receivables. We're going to analyze how could we identify our uncollectible accounts based on percentage of receivables. And so obviously the main difference in the calculation is instead of taking a percentage of sales, we're actually going to take a percent of what? Receivables. Now, there are some more differences in between the two. And the one that I want you guys to really understand, you saw how easy the percentage of sales was? I mean, it was just practically a no-brainer. Take the percent, multiply, plug it in a journal entry. That will not or may not be the case when dealing with percent of receivables. Whenever you apply percentage of receivables, you have to consider one thing, and I want you guys to take note of this. Whenever you're doing a percentage of receivables, the number that you calculate, that actual number that you calculate, must be your allowance for uncollectible account balance. The number that you calculate when you're doing your percentage of receivables must become your allowance for uncollectible account balance. So you adjust to that number. Instead of plugging that number in, you adjust to that number. Okay? So let's take the same example and tweak it out a little bit. Suppose that we sold inventory on account for $100,000 and estimate 10% of account receivable to be uncollectible. Our account receivable and allowance for uncollectible account balances before the sale was, let me think, was $400,000 and $30,000 respectively. Okay? So, suppose that we sold inventory on account for $100,000 and estimate 10% of accounts receivable to be uncollectible. Our account receivable and allowance for uncollectible account balances before the sale were $400,000 and $30,000 respectively. Okay? So, keywords, a bunch of keywords, right? Before, 10% of accounts receivable. I guess that's what we can work with right now. We have some more, but we can work with that. Okay? So now we're trying to make the estimate, and this time it's percentage of receivables. How do we know? Because it tells us 10% of account receivable. In contrast to us telling us 10% of what? Sales, right? And so we know we're dealing with accounts receivable, which is fine. And so it says that the account balances for accounts receivable before the sale was $400,000 and $30,000 respectively. So let's get to the work. Percentage of sales means we're going to take 10%, and not sales, receivables, sorry. We're going to take 10% and multiply it times what? Account receivable. So first we need to find out how much are we going to multiply the 10% by, right? Now, it said that the account receivable balance was $400,000 before the sale. Before the sale of what? Before the sale of $100,000 on the account. So as of right now, what is our account receivable balance? It should be $500,000, right? So we're we're going to take $500,000 after the sale and multiply it times what? 10%. It's going to give us $50,000. $50,000. Now, some of you may be itching to throw that straight into the journal entry, but that will be incorrect. Why is that incorrect? It's incorrect because of the mere fact that the rule of thumb for a percentage of receivables tells us that the number we calculate, which we've already done the 50,000, must become our allowance for uncollectible account balance. Do we already have an allowance for uncollectible account balance? Yes, we do. Our allowance for uncollectible account balance is already how much? $30,000. But based on this new calculation, we're saying that it should be what? $50,000. So if it's already $30,000, but it should be $50,000, how much should we adjust this account by? That's what we're looking for. And so what we're looking for is the actual what? Adjustment of how much? $20,000. So that's the amount that's going into your journal entry. That's the amount that's going into when you debit what? Bad debt expense. And credit what? Allowance for uncollectible account. $50,000. Not 50, 20,000. So be very careful about that, because if you have an allowance account already, then you have to use the T account to calculate what you need to put in there. If you don't have an allowance account, then it will obviously be the number that you calculated based on the rule that I've given you. Okay? So this is pretty much your estimate portion. All right? So with that being said, I think we've pretty much summarized what you need to understand about the allowance method. So let's move on to the direct write-off